Sorry about that. For some bizarre reason, I think I've got an issue with my one of the machines here anyway. Sorry. And Anna can hear me, which is great, which means I've switched my microphone on, which I often forget, but there we are. Let's move that out of the way. Let me just, I'm going to do a sort of run round on sentiment, if I may, because it's one of the things that we have to focus on and understand, because I'll just pull this over. This is on TradingView. When you boil this market down to its essential principles, it really is very straightforward, because it's all about risk on or risk off. In other words, whether the participants in the market are chasing higher risk for higher reward, or they're looking for safe haven, lower risk, lower reward. And that's really all it comes down to. It's about flow. It's about this. Imagine it as a seesaw, if you will. It's a very simple principle of a seesaw. You've got risk on one side and risk off on the other. And really, that's all the markets do all day long. And it doesn't matter whether you're in forex, whether you're in equities, whether you're in commodities, whether you're in bonds. That's how it all works. So whatever you're seeing and it's the principle of understanding relational analysis. It's why it's a huge module in the forex program, because it helps you understand why things are happening and how related markets reveal that information for you. And this is a nice example. This is on TradingView. And this is the bottom right, we've got the UK 100, which is FTSE 100 index. And then up on round here, I've got the volatility index on 1 minute, 3 minute, and 15 minute. So I've just changed that over to 5 minute. There we go, change that to 5, there we go. Let's take that off. There we go, right. So we've got the UK 100 here, and we've got the volatility index above. So what we're actually seeing here this is on 3 minutes. This is 8 o'clock. The UK market opens at 8 o'clock. And one of the reasons that you saw that reversal on the pound yen that Anna was looking at was purely to do with sentiment, and this reversal in sentiment, and it was reflected in the UK 100. As the market opened, we had this spike, we had the volatility trigger. So purely looking at a cash market in the UK sector, we're instantly getting a heads up that potentially we're going to see either congestion building or we're going to see a reversal, which is precisely what we're seeing right now. We saw the volatility trigger come. The market is now congesting within the spread of that candle. It's what we expect to see. And that is the reason, one of the reasons why that pound yen didn't go any further. It reversed. Sentiment is broadly weak at the moment, certainly in terms of faster timeframes at any rate, certainly when you look at the daily, and I'll hop over onto that in a minute. It still remains bullish. The question is how much longer. But what we're seeing on an intraday perspective, a very fast scalping basis, we've got the volatility index here, which has opened, gapped up a little bit. It's rising, maybe coming off a little bit, but you can see the way it's working exactly the same way. You've got the trend monitor on the bottom, and you've got the volatility triggers on here as well. So it's just a really nice, simple example of related markets. And of course, you're also seeing the same thing. I've got this is the US markets now. We're moving to Globex on the electronic contracts. I've got the 3 majors here. I haven't got the Russell up, but I've got the YM at top left. I've got the NQ in the middle, the NASDAQ. So we've got the Dow, the NASDAQ 100, and this is the S&P 500. And this is basically what it's telling us at the moment. It's saying, yeah, we're trading in congestion. You've got the volume point of control here, self-evident. That's what we're trading around. The markets are nervous, to use one of the most popular, common favorite phrases of the media, because it's a shorthand, because you know, they're not going to write long, complex analysis of, well, we saw buying coming into the market yesterday and we've got some weakness here and blah, blah, blah. They have to use shorthand all the time. And that's why reading the headlines is almost pointless, because there is no behind the numbers. And what they will also do is, and you'll probably see it today or tomorrow, there'll be some volatility in the market, and the instant headline is markets nervous, react to you know, Chinese trade war or war of words or a virus or something else. You know, that's what they have to use. And ironically, by the time the headlines come out, you almost invariably find the market's reversed against it anyway. So it's just factor point, case in hand. So that's what we're seeing at the moment. So we've got congestion. Let's just go back to the charts themselves. Can't remember which pair I've got up here. These are just simple time charts. I've got some tick and Renko up as well. This is the Aussie yen. Let's just pop that up full size. This is 8 o'clock London time, so we've got the London Open here. You know, we saw some weakness coming in. You've got wicks, the top body, pretty deep wicks, deep wick here again, reversals. You know, it's just in a congestion phase. One of the things that we talk about, and you saw it on the pound yen with the volume point of control, which I haven't got up anymore, but maybe when Anna goes back to it, she can pull it up. But on that particular time frame, the market moved through very quickly these regions of low volume. And what we're constantly looking at in terms of the volume point of control, not only is where the fulcrum of the market is, but what you're also looking at from a trading perspective is the whole business of where we've got resistance coming into play or support coming into play, depending on the amount of volume that's sitting there on the volume point of control histogram. And if you take this as an example, the trend monitor is still blue, so we're still bullish. I'm just looking over on the right-hand side. I pull that back again. The VIX is starting to drop off a little bit, so it's starting to reverse. We're starting to see a little bit of a pickup in sentiment on the UK 100. So in terms of a trading opportunity, if you were looking to jump into this long, from a volume perspective, and I'm talking about the volume histogram here, from a volume perspective, what we're looking at is this nice attenuation. We've got volume falling away here on the 10-minute. So if the market's going to break above these two levels where we had previous tops, in terms of getting in, it should move through here pretty quickly. So if we get up to 34, 35, 36, the volume falls away. And then you'll be looking up onto the slightly slower time frame. Similar sort of picture. We've got if you like, a little mini double top was forming in here, but just congestion. We've got a little bit of buying came in under this one, but we're in a congestion phase. We've got a pivot high, pivot low, pivot high. We may get another pivot low, we may get another pivot high, but what this is developing into is congestion defined with the pivots, which we explain in the program in great detail, because it's important to understand how these develop at the live edge of the market. It's not about drawing trend lines. Yes, you've got the support and resistance. I've got the on MT4, you've got support and resistance. On NinjaTrader, you've got accumulation distribution. In other words, price-based support and resistance levels. But in addition to that, you also use the pivots here to define that in real time. As you get up here, the pivot fires, comes down here, comes up here. We now know we're in congestion because we've got two at pretty much the same level. Now what we're waiting for is a breakout here. As volume falls away, then this should move through here pretty quickly. In other words, it's not going to need a great deal of effort to break through that particular level and continue the bullish trend that we're seeing at the moment. Now the VIX is starting to fall away, back down to 28.3, so only up 0.1 on the day. Trend monitor's fine, that's all good and dandy. We've got good volume under here. And remember, when we're comparing volume, this is out of Asia, this is into Europe. So we've got this little mini section here, which is just Europe really. And then we get into UK time starting 8 o'clock. So we're starting to look at comparing volume here. We've got a nice 2-bar reversal going on here. So we're really looking at that as a potential continuation. If we step down into the faster time frames, this is 15 seconds, it's pretty quick. I appreciate that, but it's one I use a great deal myself. I'm not suggesting you do use it, but it's I certainly like to use it. Let's go up onto the 3 minutes. Starting to break away. We've got a decent level in here. You know, we want to break away from these levels. There's not much in the way of price resistance above. So as this volume falls away, provided we've got decent volume under here, and look at the amount of buying we've got coming under this candle here, absolute heap of volume there. You know, that is supportive volume. That is not selling volume, that is buying volume. Absolute ton of it there. We've got a repeat of it here. And what's interesting, when you see candles like this, and you see price action that is returning into an area where you've seen high volume, and that volume is then lower or lower than the previous or significantly lower, then what it's telling you in a subtle way, this is a nuanced way of looking at volume, if you will, but it's giving you a heads up that where we had high volume, if that volume is now reducing, it means that that volume that was there has diminished. In other words, the selling has fallen away in the same price region, and therefore, we're expecting the market to rally off that. But when you look over on the 15-second, what have we got happening on the 15-second? And this is just a classic example of why multiple timeframes are so important, because they give you all the little bits of the jigsaw. We've got a volatility candle on 15 seconds. So what are we expecting? We're expecting reversal. We've got it. That's the power of using multiple timeframes. I appreciate you need lots of monitors. I appreciate you need lots of workspaces up and running, but this is what this business is about. It is straightforward if you have all the information at your fingertips. We all start out with one screen. Anna and I started out with a couple of monitors that were the size of a small bus. I mean, they were absolutely enormous. You couldn't practically manage them. They were so big. That's where we started. Now you have multiple monitors, and you're just looking at all the facets of price information that are going on that give you all the pieces of the jigsaw puzzle. Just pull this over here again. We can see where we're going with the VIX. This is where we open. We're now starting to see it drop away. We've got volatility all over the place. You can start to see here, this is the UK 100, back to the UK FTSE 100 again. It's starting to try and break free from this volatility trigger that we saw at the open. So it's desperately trying to push higher. The VIX is trying to push lower. And here we go. The Aussie is trying to push up now, away from that region. Let's head up to the 5-minute. Yes, we had some weakness here. We had a wick to the candle, so it didn't look terribly strong. Now it's starting to break up. Again, you can see this very strong buying under this candle. So it's back to multiple time frames. It's seeing what is going on behind the price action, and that is revealed by volume. The indicators are there to help you, to support you, to keep you in this move. If you're on 10-minute here, nice. There's the trend monitor here hasn't flickered because it looks at it over a longer perspective, a longer time horizon. So it's just there to try to help to keep you in, because what this business is about is holding those positions which are going to maximize your profit potential. Because if you've got lots of small winners, but you've also got a load of small losers, then your trading account's going to be waterlogged. It's going to move in the same. It's just not going to move forward. So it's a question of holding in those positions which are going to really deliver. And the problem is, whenever we get to a pause point or a congestion phase, and we've got some profit, we're nervous. We want to take it off the table. And it's another facet of trading which is really developing on from where you're trading just one position, one contract rather. You start to trade multiples. Now you can either scale in or scale out, but let's assume you're scaling out. In other words, you're starting with a bunch of contracts on the table and then taking them off. Doing it that way, there is no right or wrong way, but in doing it that way, it gives you the advantage of being able to allow contracts to run. So if you had 3, 4, 5 contracts on the table and you get to a congestion phase, you're a little bit nervous, take a couple off the table, take 3 off the table, let the other 2 run. At least you've still got some profit in the position. You've still got you're still playing in the game. You haven't just closed out completely and then you're regretting it and think, oh, I better get back in again. I'm not saying it's the perfect solution. It is one approach. The other approach is to scale in, where you dip a toe in the market, if you will, moves in the right direction, and you start to build a position in that way. There are pros and cons of both, and we explain them in great detail in the program. So we're starting to develop nicely. And going back to our sentiment window, if you like, if you want to call it that, this is where the VIX is going. So the VIX is falling nicely. The FTSE 100 is still struggling to break free, so that hasn't moved at all. That's still a little bit waterlogged. So, it's not, this market isn't raging. It's not, sentiment is not risk on, gung-ho, let's, we're going to the moon and all that. But here you are, you can start to see it reflected over in US markets. Got a volatility trigger on decent volume here, so we've got a big injection of volume. Let's see if that trades within that or whether it's going to break away. And we've got the same on the NQ, and we haven't got a volatility trigger on the ES. But again, exactly the same principles. We're looking at potential for a move higher. The trend monitor here is flip-flopping around. This is starting to transition through into bullish blue. We've got low volume nodes coming up ahead here. So once we break free from this region up into 25 and beyond, certainly in terms of the NQ, the ES, we've got to break above this level, but you can see we've got a wick here to the upper body. So it's still looking a little bit weak and weedy. So we just have to be cautious. Let's go on to the currency indices.
Sorry, can I just ask
Yeah.
a question? On your trend monitor,
Yeah.
do you keep it at this default sensitivity? You haven't changed it, have you?
I may have changed it on one or two of them. Sorry, Anna was asking me about the sensitivity on the trend monitor. Okay, let me just go on to see where we are here, and then I'll answer that question as well. Just pull this out a little bit. There we go. One of the things you can do on the trend monitor, and forgive me, I may have done it on some of mine because I do from time to time, you can adjust the sensitivity. In other words, you can smooth it out, and you can either increase the sensitivity or reduce the sensitivity, so you get changes quicker or you get changes more slowly. It's a personal preference. I can't remember what the default is, forgive me, but you do have that option in there. It's certainly something worth playing around with, because as I say, it will smooth out those periods of congestion and not flick into a change in trend. It will do more slowly, or you can speed that up. It's a purely personal preference, and you can do that on several indicators. You can certainly do it in terms of trend dots as well and others. But as a start, I would suggest you use it as a default until you get comfortable with it, and then perhaps you can start to just tweak it a little bit here and there, and you do it through the inputs on either MT45 or on NinjaTrader. It'll be the same on TradeStation as well. This is what we're seeing at the moment in terms of the little rally in the Aussie. It's there, it's kicking up. The blue line, you can see it's starting to tick higher. It's moving up here. This is on 3 minute, 5 minute. I think this is 10, yeah, and this one is 15. There we are. So we're starting to see that, but it's not, you can see here the yen. Yes, the yen is selling, but it's not terribly strong. It is moving lower, but it's not moving with great strength. So in terms of what we're always looking at in terms of the CSI is we are always looking for steepness of the lines. You saw it here with the pound, very strong buying early doors. That's now rolled over. That'll be now selling off quite strongly. If you were looking for a particular pair to consider that against, well, one you might look at is the euro. You've got the euro rising quite nicely here. It's flattening off over on the very faster time frames. You've got the euro rising and you've got the pound selling. So in terms of that particular pair, you would be seeing a decent trend developing on the slightly slower time frames. You don't need to look at the chart to just get that instant view of what is going on. And that's the beauty of the indicator. It is the starting point. Obviously, you have the charts. You should always start with the charts, but what you're looking for is really an understanding where to go and focus, put your focus of effort. You know, where am I going to concentrate? Would I be looking at, for example, the pound CAD? No, because they're both falling. They're both moving in the same direction. So there's no trend there. Would I be looking at, let's have a look over on here on the slow one. I mean, would I be looking at something like the dollar Swiss, for example? No, because the dollar and the Swiss franc, the green one is the franc, the red is the dollar. They're both moving in the same direction. They're both moving in the same direction. They're both moving in the same direction. So there's no trend there. There may be a slight differential trend because one might be moving more strongly than the other. But in terms of differentiation, there is no strength. Now, what's happening at the moment here, which is quite interesting, you're starting to see a slight fall in the dollar and a slight rise in the Swiss franc. Now, if that continues strongly, and this continues higher, and this continues on lower, they're starting to separate here as well, you would start to see, in other words, what we're witnessing here at the moment is on a price-based chart, you've got congestion, and now we're starting to see a potential move away from that congestion as we start to see a little bit of buying of Swiss franc come into the market and some selling of the dollar. Just keeping an eye on what's going on over on the other side. Let's just go on to, let's go back to the currency charts again. There we are. So yes, this move is developing. And just want to highlight this on the daily and the weekly. One of the questions we get asked a lot is, looking at, let me just pause for a moment. In fact, I'm just going to switch off for a moment. Hold on a moment, not going away.